And it's a good morning to all. And yes, we are live. Thank you very much for joining us today on Behind the Market. Sorry for a little bit of a technical glitch that has led us to this point, but we will be getting joined by Stephanie very soon. And a good morning to everyone. Thank you so much for joining us today. And we will be jump starting straight into Enterprise Thursday. And today on Enterprise Thursday, we'll be starting off with our markets roundup. And right now, we've seen that the Kwacha has continued its electric boogaloo down to about 19.104, losing about 0.5% of its value as of yesterday, 0.58%. Down to the Kwacha has lost about 2.85% against the dollar yesterday and down 1.85%. Up 1.85% in the 30 days, but still year to date down 5.66%. Stock market yesterday moved up by 0.4%, 0.3, and 0. It was a quiet day on the stock market yesterday. While we saw the bond market move up about 0.1% and then 0.48% negative against in dollar terms, with interest rates slightly coming down. Simultaneously, we did see, and we are getting joined by Stephanie very soon. Right now, simultaneously, and good morning to you, Stephanie. And how are you doing?
Good morning to you, Munyumba. How are you?
I'm fine, thanks. And as we're running through the markets today, we are seeing that the Zambia FX board did see about 0.58% movement, as I said yesterday, in the negative. We are continuing a continuous move negative against the dollar as we are waiting for the creditor negotiations. We are also seeing that against the Rand. The Rand lost about 3.4% yesterday, up 3.5% on the week, but still down 3.4% and down 0.09% year to date. So we are seeing a lot of volatility in Rand trading. It's very difficult for those who are doing cross-border trading. Now, on the other side of the spectrum, we did see that the bond index is up 14.7% year to date, up 0.1%, while up 8.67% in dollars, but down 0.48% on the day. And interest rates moved down 0.003% yesterday, as we saw the year to date movement still up 0.51%. So on the year, we've had selling. But we're still having the bond directions moving in the same way. This is why we keep saying it's the same trade that's going to be taking place. Copper dropped yesterday by 0.48%, while oil moved up by 0.18%. Very marginal gains and very marginal moves yesterday. While we saw gold fiddle around with the bend, but it came down by about 0.18% in dollars. However, wealth insurance assets, we did see that Bitcoin was up 1% in Kwacha, Ethereum was up 1% in Kwacha, and gold was up 0.4% in Kwacha, all mainly due to the movements in the FX rate. But then some positive news in the market, and we will start reporting on some of that today. But year to date, we have seen that 14.6% on bonds. It's still the leader of the mainstream assets. Gold up 14.3%, stocks up 12.2%, and dollars are up 5.6% year to date. So this is where we're looking at on the market. Bitcoin is still up 90% year to date, but remember on the quarter, it actually did lose. It was the biggest loser in quarter two, was the strongest gainer in quarter one. And also Ethereum also up 67% year to date, but they're also up only 1%. Remember, these are highly volatile assets. To go and throw all your money into them is dangerous thinking, people. These are highly volatile assets. You only use them as what we call wealth insurance. In other words, you take them out as a part of it. Now, yesterday, we did also take a look at some data that came out. We saw that the EU CPI data came out 0.3%. And 5.5%. So we are seeing that CPI data in the EU is actually coming down. This is also signs that the food prices and energy prices are starting to pull down, and also PPIs are also pulling down. So core CPIs are not going to be strong, but headline CPIs are actually pulling down. So inflation in Europe is actually coming down. Inflation in South Africa, the 20-month low, we'll be covering that story very soon. While we saw CPI data also in South Africa also pulling down to 5.4%, core CPI also pulling down to 5%. So we're seeing downward momentum in inflation in South Africa, downward momentum also in inflation in the UK. PPI, CPIs, and RPIs all pulling down as well, showing that there is downward momentum. Now, yesterday we did see crude inventories drop, so that's going to put a little bit of pressure upwards on the oil prices. And we also saw EU core CPIs rise. That was the negative news. While we saw interest rates on mortgages in the USA drop, so that's a little bit of news. UK UK bonds also declined. They also dropped, traded at a lower rate as well. We saw that the US 20-year bond was up, and also German 30-year bond also traded in an upwards direction, waiting for Japanese export data, while car registration data in Germany and Italy, in the UK and Germany, also came in positively. It slowed down in Italy, showing slowdowns in the global economy. Simultaneously, we have seen mortgage applications in the US rising, and the mortgage market index also was up. But unfortunately, mortgage purchase price, that is also come down. Yesterday, we did see U.S. housing starts drop into negative, and U.S. building permits also drop into negative. So growth in the property sector is coming down. That's also negative for copper. That's negative news for copper altogether. So this is some of the data that we're seeing in terms of our four horsemen outlook. So let's jump into our deep dive. Some of the main stories that we've been catching over the week and also recently. Copperworld Energy Corporation comes into a settlement with KCM over outstanding energy supply bill of $171 million. This basically causes an immediate reversal of the previously impaired KCM $171 million receivable. So remember, Copperbelt Energy has been trying to liquidate a debt that KCM owes it. So that's one of the things you have to pay attention to. Additionally, an amount of $107 million will also be able to reduce CECs payable to ZESCO. So remember, on their balance sheet, they are owed $171 million, and therefore they owe $107 million. And therefore, an additional $64 million will be applied to ZRA to settle corporation taxes arriving from the right back at the same time. And then the balance will be paid back by KCM in an installment plan. So basically, this gets rid of the debt that was accumulated. Remember that CEC's business model is that it acquires electricity from ZESCO and then forward sells it to the mines. It does a bulk purchasing agreement. But unfortunately, there was a debt being wrangled up. So this liquidates the $171 million debt that's actually sitting on the balance sheet. The $107 million debt they owe ZESCO, $171 million that they've been trying to cash in. Remember, they've been trying to turn this into cash. Other news that we saw, Zambia is bracing itself for El Nino-induced electricity supply crunch. The country is back. The country is cutting back on some of its export plans and plans to import power. Most of the country's electricity comes from hydroelectricity plants. Securing power from Mozambique. We're trying to secure power also from Mozambique in anticipation of shortages stemming from the El Nino as well. Mr. Victor Mopani, who's the MD of ZESCO, did say in an interview that the water levels in the reservoir will definitely dwindle in this period. So expect load shedding or something around the bend, because we have not built the power capacity that when our hydro has issues, we are not going to face it. Now, here's some of the problems we also have to remember as well. Yes, we'll blame El Nino, but the moment the Zambian economy grows, remember what I always say, people, the moment the Zambian economy exhibits 5% quarterly growth, you always start to expect load shedding somewhere soon. That's why quarter one was right on the money there, because we had quarter three and quarter four in the previous year where economic growth was really high. So therefore, quarter one this year pulled back because too much economic activity drains water in our electricity supply. So remember that all economic activity requires electricity. And therefore, when you have more economic activity, you have higher demand for electricity, which pulls on the water supply, and unfortunately, that drains it. And if we're not replenishing it at a fast rate, unfortunately, supply growth of electricity is short. Now, remember also this, people, 50,000 households connect to the grid every single year. 50,000. So, Stephanie, I always urge people to think about this. When you drive past Civic Center or you go past a church and you see a married couple holding hands, getting ready to start a life, remember, that's new demand for ZESCO. Okay, they're going to have a stove in their house, most probably. They're going to have a fridge in their house, especially these middle-class families. They're going to have a stove, they're going to have a fridge, and they're going to live in a house with a geyser. And they're probably going to add human beings to this world eventually who are also going to start getting electricity, because that baby's going to need heated milk. That baby's going to need bath water. That baby's going to need all sorts of things. So remember that as people are starting families, as we're seeing 50,000 new residential connections to the grid every single year, that adds strain. Now, we are not building enough power stations. This is why I actually said, as loony as this may sound, Stephanie, this is one of the reasons I said we need to incentivize at the source of entry of these big consumers of electricity in the household, because 58 to 60% of grid demand growth over the last decade has not been a result of the mining sector, it's been a result of the residential sector. So it's households connecting to the grid that has caused 60% of the increase in demand over the last decade. And this has been the decade where load shedding has been an issue. Okay, so if we know that the number one stress on the grid is the residential connections to the grid, then why don't we start working on trying to incentivize people to use alternative energy in the home? This is why I said there are two big items that consume 50% of household electricity. Two big items. One, the stove. Two, the geyser. These are the two biggest power consumers in the residential sector. Just these two alone are estimated to consume about 50% of a person's power bill. Of course, there's also the water pumps as well. For people who are using boreholes, there's water pumps as well. Because remember, most people, especially who have got water, that comes to the house do not rely on the water utility provider. They use boreholes. Okay, I'm not talking about, yes, I know the high density areas, people don't have direct water feeding into the house, but the reality is the people who do have water feeding into the house, the majority of them have had to use boreholes, and therefore that is electricity. So three big things that are causing consumption of electricity at high rates and then causing us to always have dwindling reservoirs of water is those main things. So one of the things I said is, what are the incentives we can pack? We need to incentivize landlords to switch to either solar geysers or gas geysers. Those are the two options as well. You can have solar geysers or gas geysers for your house. Those are options in order for people to try and heat water. Gas geysers are those that use the same handy gas that you use for cooking. The moment you switch on a hot tap, it goes through a pipe that is heated by a gas line, by a gas geyser. It's actually something that you even find used in countries like Canada, for example. They're actually quite popular there. How do you get a landlord to now build out that infrastructure? What incentives can we add? The reason I'm saying this, Stephanie, is that if you can do it, it might be a way to pull back on the government spending money on electricity. This is one of the things that people have to pay attention to. The government has to spend money on building out electricity infrastructure, or it costs economic growth. The other option I've said is that when couples are getting married, we have to be innovative here. I've said that when couples are getting married, you often find that the lady has got a appliance registry. We call it a kitchen party registry, where she sends out messages and then she gets all sorts of gifts. Now in there is a stove. That is how stoves are entering houses. In there is a stove. How do you incentivize this person? No, I'm telling you. How do you incentivize that person to switch out that electric stove for a 4-plate gas stove with an oven? How do you get them to do that? By giving them maybe, it's part of the proposals I wrote. I said, give them a 50% tax VAT refund on their wedding on their kitchen party registry, on the full thing. They, instead of paying 16% VAT on those things, they can pay 15%. They can pay 58% VAT, and that should be able to then incentivize them to switch away from this electric stove towards the gas stove in the home. Obviously, education is extremely important because people are under the misconception that gas stoves cause explosions. If that was the case, there would be explosions all over Botswana and South Africa. Okay, majority of those houses use gas stoves. There'd be explosions every week in Botswana and South Africa, but they're not. Okay, because those things are actually very safe. I've used the gas stove myself since 2015. All right. The other thing that here in Zambia, I've been using a gas stove since 2015, so we're all okay. And in fact, gas stoves are becoming more popular. The third thing we can consider, Stephanie, is this. You can tell people that if you have an electric stove and you want to swap it, bring your electric stove and the government will give you a free gas stove. They can actually distribute these. Now, why is this? Because people say, but why would they do that? Because if you total up all the power being consumed by stoves, Stephanie, if you actually total up that, it's actually the same as building a power station. It's actually, and South Africa and Botswana both did this, where instead of building power stations, this is before South Africa had its horrible load shedding situation where its city councils were not paying. But before this was in the 90s, South Africa said, look, bring your electric stoves and we'll give you a gas stove. In Botswana, they did the same thing. They would tell you, bring your electric stove, and then they'll give you a voucher to go to an OK Bazaar or something to go and get a gas stove. This was a government voucher to do that. They started a government vouchers program to get people gas stoves to be able to do that. That is an actual thing you can do. Now you can say, why would the government do that? Because if I was to take 100,000 gas stoves, for example, if I was to take 100,000 electric stoves off the grid, mind you, there's 1 million households, 1 million households connected to the grid. If you were to get just, and I told you that 25% of the consumption, 25% of the consumption of the households who are using on average 15 units, who are using about 10 to 15 units of electricity per day. So because those houses are using about 10, they're using somewhere about half a kilowatt an hour for each of these houses. If you took those and multiplied those out, you're looking at like a 50 megawatt power station. Okay, so if you gave 100,000 homes gas stoves versus building a 50 megawatt power station, you actually find that you're spending 1/3 of what you did to actually build a power station. It's called demand management. So if you actually went to people like Stephanie, like all the people here at Buddy FM and said, give me your electric stove, I'll give you a gas stove, that's actually more effective and faster than building a power station in this country. But unfortunately, there'll be all sorts of people arguing this, that, and the third, but because there's just resistance to change in this country. But it has,
I think
case
again,
studies are there in Botswana and Zambia.
Again, but maybe people want to look at the cost of diesel, kerosene, the gas that you use actually for the gas stove.
Well, remember that electricity is doubling over the period of time, is it not? So as electricity prices go up, you're going to have no choice but to start doing that. So yes, the gas has got a cost to it. But here's a question I'll ask you, Stephanie. What would you rather have? No electricity because of load shedding, or a gas stove, or gas stoves in homes? What would you rather have? Because as I said,
obviously that's the gas stove. Yeah.
You're adding 50,000 new houses to the grid every single year. Okay, I'm just putting this in your mind, Stephanie. 4,000 homes are connecting to ZESCO every month. Okay, effectively 100 houses are connecting today. And then another 100 houses are connecting tomorrow. Then another 100 houses are connecting another day. And all of them are increasing the demand. But we're seeing no power stations being built to meet that demand. Remember, we're also trying to ramp up to 3 million tons of copper, which also requires electricity. Okay, because we need the copper mines to be able to send people down the shafts, because they can't send people down the shafts with no electricity. So you're trying to increase copper supply, copper production all the way to 3 million. At the same time, you're also trying to add 50,000 homes to the grid every single year. You see the pressure that you're putting on the system here. And then every year we're shocked, why is there load shedding? Because the power stations that need to be built are not meeting this demand. Now, the difference is the copper mines are easy to negotiate between ZESCO and the copper mines. There's always an easy negotiation because they just do that in dollars. The problem comes with us citizens. We're very sensitive to price movements in our electricity. We're actually very sensitive to that, and we don't like it. And we turn it into a political thing whenever electricity prices go up. So the best thing we can try to do is to move households to alternative sources. Yes, the cost of gas can be expensive. I'm sure we can start to figure out what to do there, removing any import costs, whatever it is. We can try and figure out how to do that. We've also got national companies that are partly state-owned that can also come in to help with the supply of it. We can also increase the number of companies who are supplying gas. Companies like Puma Energy are going into handy gas, LPG, that's actually what it's called, LPG handy gas. They're going into that business as well. You're also seeing that power station that wants to start in Northern Province, the one that's coming through Tanzanian investors, they also want to diversify into the LPG industry. Why are they all interested in this? Because that is the fastest growing sector of the energy sector. It's the fastest growing sector, and they're looking and they're seeing a lot of potential profitability. Secondly, Stephanie, what we also have to consider is the price of LPG is also connected to the price of crude. And remember that the price of crude is expected to start coming down after 2028. So if everyone repositions themselves to become household gas consumers, you may find that the benefits start to accrue, especially after 2028, if people can start to look a little bit long term. By the time electricity prices meet that full high price, remember they're supposed to double by 2027, if we can transition people away from that and also transition people to heating solutions that are away from household electricity or element-based electricity, then we may be able to have a more sustainable domestic sector, because that's where the problem is coming from. The domestic sector is not profitable for ZESCO. It's not profitable for the power producers. It's not a profitable sector. Now, the problem is you can't encourage people to build power stations when you are trying to feed a domestic sector who's consuming 50%, 60%, of all the new growth in electricity, and they're doing it at unprofitable tariffs. That's where the problem is coming. The tariffs that they're giving us in dollars, not in kwacha, in dollars, are not profitable to the power producers. It's not profitable, and they're not happy with it. That is why they stop supplying. This is why they go on maintenance. This is why all these things happen. So if we want to fix this situation as a country where we can do that, we are going to have to start taking some hits. This is why I'm saying, if there's one issue I have studied inside out looking for a solution, it's this one. It comes back to the same thing. The households need to be shifted off the grid. That's what you need to do. You need to have off-grid solutions for as many households as possible so that households are power independent. The same way, Stephanie, by the way, and for anybody who's watching, is that it's the same way we did this for water. The water companies could not supply water to the households, so therefore we started allowing people to sink boreholes. And when we started allowing people to sink boreholes, more people could have sustainable water because they could control the water supply at their home. So that's something that we need to start thinking about. That's why that's a policy I said that we need to start really putting incentives together to try and encourage as many people to switch. I know that, like I said, there's always debate because everyone wants to debate, but let's start coming up with as many solutions. You got a better one, please, by all means, chuck it through, because that's what we need to start. We need to start talking about. We don't need to start talking about what's not working. We need to start talking about what will start working, because these things are going to keep catching us, and we in the domestic sector and the people are going to keep complaining about lack of electricity in homes. The next thing that we're also seeing is that other news that did come out as well yesterday is that ZESCO has successfully renegotiated tariffs with some independent power producers to achieve sustainable debt. Because some of the problems you're seeing is that ZESCO is buying electricity at higher prices than it's selling it. So already this is where the problem comes. Automatically, just the trading of electricity is causing ZESCO to go into debt. So this was the Minister of Energy speaking saying that ZESCO must start ensuring that its power purchase agreements are all cost effective and do not result in perpetual national debt, because ZESCO is one of the biggest causes of our national debt right now. Okay, all the debt we're trying to renegotiate that the government had guaranteed, ZESCO is one of the chief perpetrators of that debt. So they're trying to sort out ZESCO to stop being such an accumulator of debt. Other news that we saw yesterday was South African headline inflation drops to a 20-month low, and core inflation drops to a 6-month low. The main drivers obviously are food and fuel prices, which are coming down. The imported fuel prices, global food and energy prices are decelerating. Inflation also decelerated, was supported by producer prices. So one of the things we don't do in Zambia is we don't have a producer price index that we publish regularly, and we need to start doing that, because producer price indices tells us what is the cost of things coming out of factories, because that's usually a leading indicator to inflation. If you start seeing the cost of things coming out of factories and what we call import prices going up, expect inflation down the line to start going up. If you start seeing these things coming down, expect inflation down the line to start coming down. So the PPI in South Africa has dropped to a 21-month low, and therefore this is signaling that South African Reserve Bank is probably going to start slowing down in its interest rate hike, which will put less pressure even on the kwacha versus rand. You're also seeing that UK headline inflation has also dropped to a 15-month low, signaling also slowdowns in rate hikes. June 2023 UK core inflation dropped to 7.9% on the back of PPI inputs dropping to a 34-month low and PPI outputs dropping to a 17-month low as well. Core inflation is still elevated at 6.9%, but core PPI in the UK has dropped to a 25-month low, meaning that core inflation will start to drop down the line. So we're seeing inflation coming down in America, inflation coming down in the EU, inflation coming down in South Africa. So this bringing down of inflation pressure around the world is signaling that all these interest rate hikes we're seeing, be it South Africa, Europe, UK, America, are expected to slow down, meaning that we'll probably start to see them reverse course, deploying more of their currencies, and therefore borrowing costs around will start coming down, interest rates will start coming down, the cost of capital will start coming down, and therefore that's where you get the flood of capital that can come into Zambia. But right now, elevated borrowing costs and elevated costs are keeping capital at bay from coming into our country. Other news we're seeing is that copper miners are currently saying they are squeezed by lower prices and higher labor costs. Major North American copper miners are likely to see Q2 profits slashed because average prices fell 11%. Fremont, Southern Copper, and Teck Resources are estimated to post a combined profit of $1.53 billion for April to June quarter, according to data in Refinitiv, compared to $2.63 billion. That is more than a 50% drop. That's almost a 50% drop in profits coming in from the copper mining companies because of high labor costs and lower prices. So you can see that this is the problem. This is why you're seeing copper mines right now holding back supply, even in Zambia, because this is an unprofitable environment to be supplying copper to. So they're waiting for the prices to go up so that they can supply, and also cost of capital to start coming down. Other major news we saw also for the commodity sector is Tata is set to invest in a 4 billion EV battery factory in the UK for its Jaguar Land Rover subsidiary. This will be the first gigafactory outside of India, creating about 4,000 jobs and producing an initial 40 gigawatts. Production at the factory will be set for its JLR factory, which is set to start producing in 2026. This will be able to cover half of the UK's battery demand, EV battery demand by 2030. Remember, the UK is planning on wiping out gas internal combustion cars or new internal combustion cars by 2050. So this is also now proving that this is where copper demand is expected to come. So when you're seeing investments like this is why you're expecting copper to pick up down the line as we go along. Also, now some of the news we're seeing in terms of the crypto market. Yesterday, we did see that the XRP coin surged as the Southern Court judge delivered a verdict that XRP, which is the third largest cryptocurrency, is not a security. Okay. Now, because it's not a security, therefore, it does not have to hold any standing by the Securities and Exchange Commission of America. So, therefore, this is now standing on the ground that cryptocurrency is property, not a security, or it's a payment system. It is either seen as a payment system, and the SEC will have to revise its tactics on its cases that it's trying to bring against cryptocurrency in America. So therefore, this is going to send a signal to cryptocurrency around the world. US also accepts 6 spot Bitcoin ETFs for review, including BlackRock, Bitwise, Van Eck, Wisdom, Fidelity, and Invesco. These are huge companies. These are the biggest ETF providers in America. So now they're expecting that these will actually now bring some proper standing. The SEC has previously rejected dozens of spot Bitcoin ETFs, saying the proposals did not meet anti-fraud and investor protection standards. The first Bitcoin ETF futures was back in 2021, where we saw Bitcoin prices surge to 69,000 back in November 2021. So you can see that if one of these ETFs goes through, Bitcoin prices are expected to rise because institutional capital will be able to safely flow into Bitcoin, and that will obviously drive a lot more Bitcoin demand. And finally, So, and finally, one of the things we also are seeing is that the USDT market capitalization has risen while USDC has declined, mainly because US dollar tether, which is the stable coin, the biggest stable coin, its market cap has risen 25% year to date to 83 billion, while in stark contrast of USD Circle, which is the Coinbase the Coinbase stablecoin, its market cap has dropped by 47%, mainly due to exposure to Silicon Valley Bank. So a lot of investors who held those USDC coins, sold them and then rushed to USDT because they were afraid that that Coinbase would not be able to meet the cost there. So that, Stephanie, and I think for now, due to time, basically rounds up what we are seeing today. Our main takeaways from today's conversation is electricity. We need to find policies that help the retail or the household sector transition away from the traditional stove and the traditional geyser. Those two are the biggest consumption points, and we must support the transition of households moving away from stoves and geysers that consume electricity from the grid to independently powered stoves and geysers, and eventually trying to create houses that can stand alone and have their own power production capacity as Elon Musk's vision. There's actually a way he says he's created what are called roofing sheets that are solar roofing sheets. So basically you can actually have your roof that looks like a regular roof, but it's actually a solar panel, and therefore it's able to generate electricity for the day. And if you have battery packs in the home, that's the vision he has, that your roof should be able to power your house. That's the house of the future, Stephen. So when that guy throws a ring on your finger, Stephen, okay, when that guy, okay, I'm not even going to say what his name is or anything, but when that guy throws a ring on your finger, okay, let's start talking about, about gas stoves in homes. Let's start talking about having solar at the house. That's when you will truly be level, Stephen. That's when you'll be levels.
Nice.
Not this thing of tapping from the grid. But anyway, that's where I'm going to leave it for now, Stephen. I don't know if you have any thoughts from today.
Well, I think my thoughts are also intrigued by the fact that a lot of houses today are getting to tap from the grid. And just like you said, a lot of people have a lot to talk about, but we still can't run from the idea that we need to use solar and gas stoves.
And also, as well, we need to support alternatives to charcoal. That's a different one. That's not a grid-related issue. I know that some people have created solutions, be it in Ghana, Kenya, where they use sewage waste to produce charcoal. So it's actually a perfect cycle. So therefore, and it's charcoal that's cheaper, burns faster, and can be used. But there's a narrative that this thing came from sewage. So that's the struggle that people are having to reconcile. But that's why they made it cheaper and they made it burn faster. And I know they got sewage, dried it, and they used cassava. So that was a way to replace Malaysia, to stop people from cutting trees, because that was the problem that we're having in Ghana. So these are the solutions we need to push. We need to fight Malaysia at the same time by creating an alternative, and then fight the growth of the grid by creating alternatives. That is the vision we should be talking. By 2030, we should be talking about biological charcoal, other than trying to cut trees down, and we should be talking about independent households that are disconnected from the grid but have full electricity in them. That is the vision of the end of this decade that we should be talking about.
Thank you, Munyumba, for joining us today. Until tomorrow again, it's bye for now.
Thank you very much, and it's bye for now.